What is the number one mistake that people make when investing through mutual funds? Recently, my friend and I were discussing our portfolios, and he showed me that he had invested in about 30 different mutual funds. Is that a good strategy? Let's say that you have decided that you don't know enough to pick individual stocks and have chosen the mutual fund route. You also decide that you want relatively lesser risk, so you choose mutual funds which only invest in large cap stocks. So then you begin the process of choosing the right mutual funds. This is where you remember the general principle that you've heard of, that you should diversify your investments to reduce risk, which in this case turns out to be a mistake. Why is that? On one hand, we have indices like the Nasdaq 100 in the US and BSE 100 in India, which track the top 100 companies by market cap, and you have mutual funds that just track these indices. On the other hand, you have mutual funds which invest mainly in large cap stocks but pick the right ones at the right time. So what you're trying to do is choose a few mutual funds that attempt to beat the market index. These funds will likely invest in a minor subset of the top 100 companies. Now, this is a reasonable strategy if you stick to one or two mutual funds and can indeed pick the best ones. However, if you start to think of diversification in this strategy and start to pick 5 or 10 mutual funds to reduce fund manager risk or the risk of one or two of them performing badly, you then start to make a mistake. What happens is these 5 or 10 mutual funds in combination will end up investing in almost all of the top 100 companies and start mirroring the index, but at a much higher cost. Typically, index funds will have a much lower expense ratio or cost, and on average, large cap mutual funds actually tend to underperform the index. So if you try to diversify by buying lots of mutual funds in the same category, you're actually buying the index at a higher cost. In effect, my friend had ended up buying various market indices at a much higher cost. Definitely not what he intended to do. The bottom line is that diversification does not mean that you end up choosing a lot of mutual funds. So, to avoid this mistake, you have two choices. If you want to avoid the risk of picking the right mutual funds, you just stick to picking index funds which mirrors the market index. Or you should do your research properly and pick the top 1 or 2 mutual funds in that category and be okay with a slightly higher risk. Trying to mix up both of these strategies is the worst mistake that you can make. And if you want to know and avoid the top mistake that I made in the stock market that cost me a lot of money, watch this video.